All right, I actually wanted to do a video yesterday, but my voice, it's gone. I had some throat pain yesterday. I think it's a cold, but I've gotten better today physically. But my voice is, I mean, yesterday my voice was almost, entirely. It was very difficult for me to speak actually. So I wanted to do a video yesterday. I couldn't able to do that. I thought I should rest my voice, but today definitely there's a lot of things we need to talk about. So bear with me if and I'm not gonna be able to yell. Sometimes I get all hyped up and with the rant and things like that, but I'm not gonna have to do any of those things in this video. But looks like all the indices, as you can see, Spider's up 1.3%. Russell 2000 led the market today. Look at these stocks here. This is what the mainstream media has been calling Magnificent Seven, right? Apple, Amazon, Google, Microsoft, Nvidia, Tesla, Meta, Netflix. All these guys are up a lot, and Meta is up 10% after earnings call earlier today. Is freak of nature, and just because you have to understand the perspective, the context of how Meta was trading at 80, now trading well above 400 is crazy, and it's V-shaped higher without any sort of proper pullback. And you think, any sort of digestion of gain is supposed to be in store, but we're up 10% after hours. And that's why, some of you guys remember that laws of physics, law of physics do not apply in the stock market, because unthinkable is very much possible here. The market is up a lot today, but I think what's really notable is you can see this is a down gap, right? This is a down gap from yesterday. Well, actually not yesterday. Wait, 1, 2, 3, 4. Yeah, it is from yesterday. That's actually a one-day move right here. It's hard to believe. That's why I had to pause for a little bit and just kind of double check. But that's one day a move, right? Yesterday morning, 1, 2, 3, 4, 5, 6. Fed minutes there, but you can see there was a down gap, right? And it came down. It broke below this pivot, and that's important because this level acted as resistance. And as you can see, it also acted as resistance yesterday on that first hour. We see that upper wick here, right? See that upper wick? See that? So that upper wick tells us it gapped down, but there was a little pop there. Bulls trying to make a move, but that was prior resistance acting as another new resistance, not to mention, as you can see, that microterm that acted as support here. Of course, now that it's broken below that microterm, it's going to act as resistance. So sort of like a double resistance there. However, my short-term moving average was right there. You see short-term, that's my green moving average. And then we did see that little bit of support for the first or the last, so first, second, third, fourth, and fifth hour. Bulls tried that one more time to make a run for it, but again, failed. Rare, right on that 488.50 resistance. So on that fifth hour, on a closing basis, on an hour, again, this is a 65-minute chart. On a closing basis, as you can see, not able to, again, there's a long upper wick there, but not able to close above, on that fifth hour, the microterm. What does that mean? It means that microterm sentiment is still very much bearish. There's still a lot of fear in the microterm, even though there's some pops here and there, but they were not sustained, right? You see a little pop and broke below, and then microterm was never reclaimed. And then you can see on the last hour, look at that long bearish candle. So it looks like all these, if anybody went long, right, any short-term, micro-term traders, anybody went long anywhere in this vicinity, looks like they placed their stop just around here, and that's what was happening. All the stops were getting taken out. And Well, now looks like market obviously likes to fool the majority, and because it closed in such a weakness, there's no down lower wick. It closed with this shaved, almost like a Maru Bozu candle there, at least on the at the bottom end of it, right? There's no tail there. My midterm was right there. You can see that's my midterm moving average. That's dotted blue there. And this is the vicinity where we found support because we gapped up.
Perfect.
But you can see on the first and second hour today, even though it gapped up, it struggled on the first 2 hours. Why did it struggle on the first and the second hour? Again, that's first, that's second hour. Because remember, the micro term and the short term moving averages, they were reclaimed to the downside. So now they are acting as resistance. So you can see on the first hour, it is not a coincidence. It is not a mistake. It is not a random occurrence that when it traded right to that micro and short term, and you can see even on the second hour, it fell down. Where? It all the way down to near my midterm. It fell down from the short term and the micro term here. There's a short term right there. But it did get reclaimed on the third hour.
Perfect.
And it closed above it. That's important, right? It closed above it because again, yesterday, it did not close above the micro term. We had the run, but on a closing basis, that's why these candles are important. On a closing basis, not able to close above the micro term and short term. It didn't do that yesterday, but it was able to do that today on the third hour. There's a short term, there's a micro term. And what happened? Run, right? So there's up run. Because now that micro term and the short term moving average, they've been reclaimed, they've been reprogrammed to support the buyers. And look at that. Third hour, fourth hour, fifth hour, sixth hour, you see? So all the battles were fought right here. That was a battle. And what happened also that I didn't mention, the gap was never fully filled. And you guys remember, if you've been following me long enough, when the gap remains open, and in this case, it's an up gap, right? This is an up gap. So if that gap does not get fully filled, it's going to favor the buyers. And so we got up, destroyed the micro short-term moving averages resistance, reprogrammed it. Now we support the buyers, and it gets back up. All right. So now, important part is it breached the gap area. What did I just say about this right here? This gap still remains open, so it's favored the buyers, yes? Opposite is true. If bulls do not fill the entirety of this down gap tomorrow, if they do not, they fail to fill the entirety of this down gap tomorrow, it's going to favor the seller. That means, boss bears are already angry. Boss bears haven't eaten for 3 straight months now. So now boss bears are trying to cook up something here. So if this gap doesn't get filled, right, that's going to pose a threat to the bulls. And if we see any sort of weakness while this gap remains open, I could see another volatility. And bears are going to try to come down here and attack this gap.
Huh?
Best bet for the bulls is to gap above it or go up and fill it. If it gets filled, it's going to act as resistance. But if it gaps above 490 or so, then it's going to turn the entire thing as an island up gap.
Perfect.
And that will be the most smooth transition to the upside. And we're back to all-time highs run-up mode.
Perfect.
So the oscillator here, as you can see, we got the cross. Bullish cross.
Perfect.
There. Yes. And we're seeing the advancement, right? So we can see the oscillator is advancing. And we saw that here. Right? There's no whipsawing action as of today. It's stretching. What you have to understand though, there was a down gap here. You see that? Down gap got filled. It pulled back because it's gonna act as resistance. But at least it got, entirety of it was filled, and then it propped itself up above these moving averages both. So now, for this setup to play out, bulls need to go up and fill it, pull back, use these micro term short-term moving average and use support, and then boom. If it doesn't get filled, bear's gonna come back down and retest.